Hi there. A very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session on this Sunday afternoon, as promised. And today I would like to talk to you about one of the sectors that has performed well and that has been doing well over the last, you can say, about 3 4 months or so, but will continue to perform even better as we go along from October onwards. We would see in the next 6 months the sector is going to do much better than what it has been doing in the past. So what we are going to witness is perhaps one of the better rallies in the sector. So I'll disclose that in a while. Plus, we'll answer your queries. Whatever queries that you'll be having, I'll answer that. And if you have any queries and you want to ask in the midway, you can ask through super chat and super stickers, and I'll be able to answer that straight away between the discussions that I'm having. Plus, those on Patreon, thanks a lot for all the supports. Kindly do support me on Patreon and subscribe to my channel straight away. There is extremely low subscription. I don't know the reason for that, that the subscription rate has gone down by nearly 90%. So, would like to request you all to kindly subscribe to the channel, whoever is watching my channel. All right. Afternoon to all of you. Afternoon, Harsha and Shri. So let more people join in. It's a Sunday. I would like to have give time to for more people to get in and into the stream, and then we'll discuss the main topic. I'll answer the questions later on, so you can ask the queries once I complete the discussion altogether. About the markets have done reasonably well over the last few months. We have seen that the markets have corrected very little bit, but it seems like that whatever happened on Friday, that we could be in for you can say a week in which there will be more red than green, and there'll be more decline that would end up happening. So in that regard, one has to be careful if you're taking a very short term call on some of the stocks and you're in good profits, probably take profits off. uh, but those who have even a 6 months time frame can look to buy in this correction, or if you don't have the money, then do not do anything, and probably in 6 months time we may see the market much higher than where we are seeing very good earnings coming from most of the nifty companies, and I think the trend should continue as we go along, as more vaccinations is being done. So in that sense, we would see that better numbers would come in, and the stock prices, which seems like at elevated levels, uh, would look reasonably valued, say 2 quarters from now. So that's the call on the markets per se on a short term time frame. All right. So the main topic that I wanted to discuss with you, perhaps I had discussed this about a month back as well, and I want to talk to you about one of the sectors that could continue to do well from October onwards, and the sector that I wish to speak about is cement. So cement is a very interesting sector and very interesting levels. I would disclose as to which are the cement companies that I'd be willing to probably invest if I had the money. But as a sector altogether, if you look at on a yearly basis between August, September, these 2 months, and probably end of July, there is always an amount of selling that takes place in this sector because of the monsoon season, because of whether the numbers would be as good as envisaged. From October onwards, as the festive season begins, and with Diwali around in late November, it seems like that the third quarter of FY22 would be big for this sector, and we are seeing the green shoots of that taking place already with the numbers that have come in for the last 2 3 quarters. So most of the cement companies should do well, especially the larger ones and the mid cap ones. I would not tend to get into the smaller, you can say, cement companies. I would not tend to get into companies which are lesser than say 5,000 6,000 crore market cap. uh, or lesser than 1,000 crore market cap for that matter, rather than 5,000, 6,000 crore market cap. But there are cement companies, larger mid caps and large caps, which are good. So first in line, and although it has run up a lot, I still believe there is a lot to go in this, and this is Dalmia Bharat. Dalmia Bharat has come out with a number of their stores already. They are opening up new stores. They are hiring big time, and that is why the stock has been relentlessly rising. And I believe that in the next 18 months, if the stock is around 2,500, that's what I presume, you would see the stock beyond 4,000. That's what I feel in the next 18 months. So these calls are all slightly longer term and not medium term. But if you can hold on till March of 2023, then you could see the Almia Bharat well past 4,000 by that time. There could be some corrections here and there where you can buy probably at current levels and on declines to 2,200 to 2,300 if you get a chance. I think 2,000 should hold on, and going forward we should see 4,200 on the stock. So any declines and current levels you can keep accumulating, and going forward you should see 4,000 to 4,200 over the next 18 months or so. So that's one. The second stock that I like in this space is India Cements, also because of the kind of investments that has come in from institutional investors, etc. But I would still prefer to buy into a Dalmia Bharat rather than India Cements. But still, if I have to pick three, then one of them would have to be India Cements, with the kind of turnaround in numbers that has taken place in the company over the last 1 year, 3, 4 quarters. And I think this trend will continue, as I've just mentioned, that the sector per se and the sector completely would end up doing extremely well. And you'll be able to see better numbers coming through in something like India Cements as well. Coming forward, the third stock that I'd be more or less interested in buying would be uh, Ultratech. I think both ACC and Ultratech has been doing particularly well, and I believe that Ultratech going forward should continue to perform the way it has been performing, and you should see something like 30% upside over the next 6 months in the stock. Yes, for some or for many, the stock per se is extremely expensive, but going forward, you would see that it would continue to gain momentum as more larger investors get into the stock. So the third stock in my list is Ultratech with a 30% upside in the next 6 months, and 100. I would say not 100, but at least a 60% upside over the next 15 to 18 months, 60 to 70% upside. I believe that cement as a sector has not done that well over the last decade or so, and you need to understand what is happening in the market. I believe that what is happening in the market is that those sectors that were long forgotten is coming back, and they are coming back into the reckoning. And probably from say now on till the end of the decade, you will see a great move in these sectors where people have gone under owned or under owning the stocks. So we look at real estate. I've talked about real estate in my other videos. You look at cement, you look at construction activities or construction, you look at ancillary construction. I'm not saying infrastructure, but ancillary construction equipment manufacturers over a 6, 8 year period should continue to do decently well. I'm not saying, still I have my, you can say, inclination towards consumer centric stocks, but that is not to say that the sectors that I'm mentioning in this video is not going to do well. So cement, construction, ancillary, paints, you look at real estate, they will do reasonably well over the next 5 to 6 years. So these were my three picks. Yes, people would ask me about smaller companies. There are many smaller, you can say, cement companies that are there. I would not like to go that path, because once the larger companies come out with much better numbers, people would prefer to buy very good quality large companies rather than buying into any you can say smaller or small cap company altogether in the same sector. So that is why the move happens big in such stocks. So a prime example has been IRCTC. A disclaimer: I hold the stock. Uh, it has moved a big time from around 25-27,000 crore market cap, although at that time it looked like, compared to other, you can say, railway companies like IRFC, you have Texmaco, you have other kind of stocks. Uh, it was a much larger company, and it seemed like that the move cannot be that sharp that quickly, but it did take place. So that's the same kind of moves you're going to see in these larger kind of cement stocks. And plus there is more margin of safety in these stocks, that even if they fall, if the market falls for a week, 10 days, they'll recover extremely quickly. So that's why it's better to trade or invest into larger cement companies. All right. So I'm ready to answer your queries. You can use the super chat and super sticker feature, that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Okay. Bector Foods, I believe, is not quite coming out with very, you can say, spectacular numbers that to look at it in that manner. The valuations, I would say, still stretched in the stock. I would not look at Gati, Rajesh. If you have it, probably exit and get into better consumer companies. That would be my call. Say Heidelberg is also good. One of the better, as you can say, smaller cap companies, Mr. Abdullah, and I think valuation is fine. Valuation is fine in most of the cement companies. I would like to say that yes, if you have it, hold on to it. If you don't have, then get into either Ultratech or something in the mid cap arena. They would continue to perform even better. So Anjani Portland, if you think that fundamentally it has something special, that okay, numbers are different, etc. Yes, of course you get into it. Otherwise, I will look at larger companies. Okay. Patel Airtemp, I have talked about it many times. The company is good. It's just that the numbers have to follow up. If the numbers doesn't come, then the stock will fall because it has run up. So then you have to wait for numbers to really come up over a 4 or 5 year period. It's a good company to get into. All right. Lakshmi Organics is a good company in the chemical space. Probably what you can do is, if you have it, hold. If you have a very short term view, yes, you can book profits. But over a 2 year period, it should perform even better. Pokarna, I would say. What I can say is, I need to look at the stock per se at the moment. What is the stock price, etc. But it is a kind of a unique company, so I won't say that you should not be in it, but don't have more than 5-6% holding into the stock. If you have it, hold on to the stock. Let me open up the charts and I can tell you where the stop loss can be placed, etc. But on an overall basis, I would say that the company is good, but somehow the numbers have not followed up for many years, and that has what has deterred me from getting into the stock or putting up a video for the stock. Although I used to track it big time between 2011 to 13 14, so it's around 500 rupees at the moment. The market cap is around 1500 crores for Pokarna. uh, See, what you can do is, probably if you have it, hold and buy some more on declines to 470, 480. That would be my call. Have a couple of years time frame. Hopefully numbers and the stock prices will follow that a big move would envisage through. The business per se is very good. So any declines to 460, 470, get ahead and buy into it. Your longer term stop loss 100. So that's why I would like you to buy on declines to 460, 470. That would be my call. All right. Both life insurance company, HDFC Life, SBI Life, is good, but I would still get into more like not into financials but more consumer oriented companies in mid cap consumer or in smaller consumer companies. I have made a lot of videos with regard to the same, so you can have a look. Okay. JP Power, I would say complete avoid all these power companies except for one or two. They are just don't buy. That's it. Sequent, I think, is headed to 200. I think there is. So what I can gather from my knowledge is there is some amount of selling by a, you can say, minority promoters, very small promoters that they are selling. Probably will head towards 200, 205, and then recovery will happen. So uh, I don't think there is a cause for worry. If you have the money, buy more around 200. If you don't, just hold on for a couple of years, the performance would show through in something like Sequent. Both Dixon and Mindtree is a buy. Mindtree is slightly longer term because it has run up, so there could be some declines, etc. But in terms of Dixon, I would say at around 4200, 4100, 4300, very good position to probably get into. I think 6,000 possible in the next year or so on Dixon in less than a year's time. CDSL is a good portfolio kind of a stock that you can probably buy and hold over a longer period of time. Frontier Springs, there are issues with promoters having higher salaries. So that's the only issue. If you can take a 20-30% risk, hold on to the stock, the valuations is very attractive, but there are issues with promoters, etc. So kindly have a look at their, you can say, annual report before getting into it. All right. Camps, I don't have a view at the moment. Do not track the company that much. Except avoid car trade. If you have it, avoid exit it. It's a loss making company, not quite making that huger amount. So probably avoid it. Zomato, you can buy around 118, 120, 115 around those levels. Those will be good levels to probably buy into. Uh, but I would still say that loss making companies, even if it is a large brand, through my experience, I can say that it's better to buy into good quality, high growth companies, even if they are not brands, rather than buying big brands. Kitex is an avoid, complete avoid. Do not get into Kitex garment. IGL is headed towards 750, 730. If you have it, hold. If you don't have it, buy around 470, 480 if you get a chance. So that's the call on IGL. Okay. Jamna Auto, do not buy for long term. If you really want to buy something in the auto ancillary, then there is Bosch for long term. Then there is Motherson Sumi for long term. You can probably look at GNA XL as well. Ultramarine is a decent stock, but there are larger chemical companies which are better off rather than getting into Ultramarine. KPIT is a good company, but there is correction going on. Let the correction be over. Let the move again begin, and only then get into it. Sona is an avoid, so that would be my call. Loris Lab is a buy around 620, 630 if it gets to. I think it got to 630 on Friday. I think there's a chance it can go there again. So probably you buy into Loris at these levels, yes, and hold 2, 3 years. All three, I would say, Mr. Mansoor. I would say all three. I think Tata Elxsi, L&T, Infotech, they are top class companies. These are my preferred picks. But if you have all three, hold on to them. If you want to pick one, probably Tata Elxsi, but they will all perform well. A Delta Corp, I don't have a view. I don't track the company that much. India Mart is expensive in my opinion, even now. Although it can go up, it has been consolidating for many weeks, months. There's a good chance that it can go up, but on a fundamental basis, I believe it's expensive. You need to consider that online businesses did extremely well over the last 2 years. I think it is now time for retail and you can say retail stores kind of businesses and opening up kind of trades to do extremely well for the next couple of years. In Jubilant Ingrevia, very good for 3 years. Buy, probably you'll see 60-70% upside. So that's my call. Rosari is a good company to hold for 2-3 year period. So hold on to it. Yeah. Subex is good. Subex is a decent company, but I would still would prefer getting into something like an, you can say, a builder soft, something like something which is 20 to 30,000 crore market cap, or even a Mindtree for that matter at 60-70,000 market cap. Right. Aarti Surfactants, I've looked at the company. I would say avoid. I think they're better company. Galaxy Surfactant is a better one to probably get into. Happiest Minds, a disclaimer, I hold it. I have a long-term target of at least 3,000 in the next 2-3 years on Happiest Minds, a doubler from here. Talked about India Mart already. Naukri is expensive at 66, 6,700. Probably any declines to 6,000, 5,800, good levels to accumulate. That's why I talked about, you can say, Info Edge a lot when it was around 4,000, 4,300. And you have seen what the move it has been having. SHIL is a buy around 400, 410. If it goes there, any 4-5% decline from current levels is a buy. I believe the 600, 650 coming in the next 6 months on SHIL. All right, guys. Thank you. Thanks a lot for being online and for being in this live session. Kindly do subscribe to my channel, whoever is watching, and do support me on Patreon. Thank you.